Lesson 7, the asset side. Now coming back to the accounting equation, we saw that the accounting equation is nothing but the mathematical representation of the balance sheet. So by this definition, the accounting equation and therefore the balance sheet must always balance. So if you add an asset on one side, there should either be an asset decrease on the same side or a liability increase on the other side. This is the format of a balance sheet. On the left hand side, we have assets, and on the right hand side, we have liability and equity. Depending on your country and the country's regulations, the balance sheet could either be a vertical balance sheet or a horizontal balance sheet. A vertical balance sheet means you have one on top of the other, and on the horizontal balance sheet, you have the liabilities on the left side and the assets on the right side. Let us now focus on the asset side. As you can see, there are various assets that are listed in this balance sheet. Let's start off. Assets are everything that you own. There are also rights that you have and which have a monetary value. Before we proceed further with regard to assets, there is a very important concept called liquidity. Look at this picture. There is water flowing. And what are the features of this water that is flowing? It easily flows, it has no shape, and can easily be converted from one form to another. Using the same example from the accounting perspective, liquidity holds a very similar meaning. The term liquidity, therefore, means the ability to convert the asset into cash. So, when an accountant says that you have a lot of liquid assets, that means that you have a lot of assets which can be easily converted to cash. Highly liquid means it can be easily converted to cash. Let's take an example. Assume that you own two assets, shoes and a house. Can you tell me which of these are most liquid? Is it the shoes or is it the house? Obviously, the answer should be shoes, because when it comes to the house, by the time you convert this house into cash by selling, you need to go through various procedures such as valuation, sale deed, registration, the legal formalities, and so on. So in this example, shoes are more liquid and the house is less liquid. The assets on the balance sheet side are represented in the order of liquidity, from the most liquid to the least liquid. So theoretically, the most liquid asset is cash itself, and therefore that is the reason why in most balance sheets you will find that cash is the first item in the balance sheet. Okay, so you have the most liquid item at the top and the least liquid item at the bottom. Summary: assets are things owned by a business. They are shown in the balance sheet in the order of liquidity, and there is a concept called current assets which we'll cover in the next lecture. So in the next lecture, we'll go into each and every item on the asset side and let us understand what they really are.